In today's challenging real estate landscape, we're navigating a market characterized by declining inventory, rising mortgage costs, and a global uncertainty. I'm Tony with Clarkson Santoro, and this is our real estate update for the week of Friday, October 27th. We know that selling and buying a home can be stressful and confusing. In this series, we use our more than 50 combined years of experience helping clients sell or buy homes to explain what the latest San Ramon real estate market trends mean for you as a homeowner who's thinking about selling or as someone looking for a house that you will love to call home. Let's start off by looking at this week's activity. This week we had 21 homes on the market, which is 2 fewer than last week, with an average asking price of $1,778,000, which is a little lower than last week's average asking price of $1,945,000. 2 homes went pending, which is less than last week's 4 homes, with an average asking price of $2,687,000, which is up from last week's average asking price of $2,117,000. And 9 homes closed this week with an average sales price of $2,191,000, which is significantly higher than last week's average price of $1,896,000 for the 3 homes that did sell. So now that we've seen the market's performance over the past week, let's look into the broader trends that provide insight into its overall health and potential future direction. Before we proceed, if you find this information helpful, you can subscribe so you don't miss out on future updates. And why not share this with a friend as well? Everyone deserves to be in the know about their local real estate market. All right, let's take a look at those current trends. This week's inventory saw a gentle reduction in the number of active homes from 23 last week to 21 this week. It's not unexpected as we head into the fall and early winter season. In reality, this number should be lower by 3 or 4 homes, but the pending sales have also experienced a drop-off in their numbers, which leads us to the turnover rate. As of the end of this week, it appears that we've transitioned into a buyer's market in terms of our turnover metric. This isn't the first time we've dipped below 100% turnover rate in the past few months. As you can see here on the chart, we dipped below 100 a couple times in the past few months, but it usually rebounded to positive turnover rates rather quickly. Now the big question is whether this is just a one-week event or the beginning of a new trend. Interestingly, the drop in the turnover rate isn't due to an increase in inventory. It's primarily driven by a decline in pending sales. In line with that drop in turnover rate, we've also seen a decrease in the amount that buyers are willing to pay over the asking price. This week, with just about a 0.65% premium above the asking price. It's important to note that this metric tends to lag behind the market because it's based on transactions that opened escrow over 30 days ago. So it doesn't necessarily reflect current market conditions. However, even with this decrease, it's worth mentioning that we're still well above what homes were receiving at the same time last year. Nevertheless, all trends are pointing towards a continued decline in this premium, and it's quite likely that we'll see a drop below the asking price in the coming week or two. This suggests a potential shift towards a buyer-friendly market in the near future. One bright spot in today's update, which is not entirely unexpected, is the substantial uptick in the average price of homes, the closing price of homes. We've been mentioning this trend in the past in pending sales, clearly indicating that we would see this number increase. Today, the average price climbed to nearly $120,000 from last week, reaching almost $2 million. Which nearly matches the highest point of the year overall. We anticipate this trend will continue for another week or two, but then we're expecting a decline in the average sales price. This metric highlights why it's crucial not to judge the market's current condition solely based on the latest average sales prices. It's an important piece of the puzzle, but it's more like looking back a month or two rather than reflecting on today's data. Market conditions are dynamic, a dynamic interplay of various factors, and this price increase is just one element in the larger picture. Speaking of the larger picture, we are witnessing some turbulence in the stock market. Investors are relocating their funds towards fixed income investments as interest rates have seen a significant spike over the course of this year. T-bills, for instance, have risen above 5% for the first time in many years. More conservative investors are opting to park their funds in fixed income, and this shift is having an impact on stock equities. As a result, we've seen a 2.7% decline in the QQQ fund, which measures the health of the tech market this week. While not an enormous drop when combined with other financial news, it's making prospective home buyers more cautious and reluctant to make bids in this real estate market. Adding to the string of challenging developments in the market, we're witnessing a persistent increase in interest rates. Over the past month, the cost of mortgages have been steadily on the rise. In fact, today's rates have climbed by another 13 basis points compared to last week, bringing the rate to a substantial 7.79%. These escalating interest rates can certainly pose a significant hurdle for potential homebuyers, impacting their affordability and potentially slowing down an already slower real estate market. It's abundantly clear that we are in the midst of a typical fall and early winter market, characterized by slowing sales and declining inventory, which is an expected and common trend during this time of year. However, the real challenge lies in the financial aspect of the equation. The rapid increase in mortgage costs is undeniably discouraging a significant portion of buyers, impacting their ability to enter the market. Furthermore, the ongoing conflict in the Middle East is adding an extra layer of uncertainty. It's our opinion that some buyers are adopting a wait-and-see approach, holding off on entering the market until they can better assess how the situation in the Middle East unfolds. This geopolitical uncertainty, combined with the financial concerns, is creating a complex and cautious landscape for both buyers and the real estate market as a whole. We hope this summary and commentary helped you understand how our market is impacting your options. If you have any specific questions about navigating the market to sell or buy a home, don't hesitate to drop a comment down below or reach out to us directly. We're here to guide you every step of the way. And if you did find this information helpful, share it with a friend. And don't forget to hit the subscribe button and ring the notification bell so you'll always be in the know about the latest real estate news here in San Ramon. Have a safe weekend. We'll see you next week with a new update.